And it says it's setting it up for restream, so it should be in a second live. Yep. Okay. Looks like we're live on Facebook. Everyone that's watching, we're just going to get started in a few minutes. Just waiting for everyone to join. Hannah, does it look like it's working on your end?
Yep.
Yep. Okay, cool. All right, I think ready to start if you guys are ready. All right.
Let's go.
So hi, everyone. My name is Andrew Gordon. I'm an attorney. I'm also a CPA at Gordon Law. Also with me is Michael Raff. Michael is a senior attorney at the firm. Has been with us going on over 7 years now, working in both corporate matters and complex tax issues. And so today we're going to be talking about a variety of different things, but the main focus will be on the stimulus options that are available for small businesses. There's a lot of options out there. There's a lot of different things in the news and updates. And so we're going to hopefully try to clarify everything for everyone and answer questions that people have out there. So, hey, Michael, how are you doing over there?
Hi, Andrew. Doing well. Just trying to keep up with the day's events.
Yeah. And it seems like every day things have been changing. And so today's April 27th, and the news from today is that the SBA is finally accepting applications again for the EIDL and also the PPP programs. And so it's big news, I guess, today.
Yeah, it's exciting for people that missed out on the first track to have a chance, and hopefully the large businesses have learned their lesson from a public relations standpoint and won't be consuming a majority of the 310 million or whatever the number was that was reallocated to the program.
Yeah, and so I guess maybe even to start, we could talk a little bit about that, and then we could dive into also the EIDL. But the PPP, which we'll talk about a number of times in this video, is the Payroll Protection Plan. And this was originally passed as part of the CARES Act, the stimulus bill, a few weeks ago. And it was a option for small businesses to have a forgivable loan for up to 8 weeks of payroll, rent, and utilities. But as great as this program was, it didn't last very long. Within days, maybe less than a week, the money was pretty much spoken for. And the $349 billion that was available for small businesses was, as Michael mentioned, claimed, and by a lot of larger businesses as well. And so today, April 27th, the SBA has now opened up the opportunity to apply again for 310 million, so almost the same amount as before. But from what it sounded like, a lot of businesses didn't get in first round. And we've had clients and people that we've spoken to too that may have applied and still waiting. So is that kind of the feedback you've seen too, Michael? Is not everyone's gotten in so far?
I've definitely heard that. I've heard a lot of horror stories from businesses that were lined up at the bank or virtually lined up at the bank on April 3rd when the program opened, had their application ready to go, and not only didn't get funded, but have heard stories of large banks, Bank of America, Chase, not putting their application in at all, or prioritizing other high valued loans ahead of them. And so correct, a lot of businesses, a lot of mid-sized small businesses at this point are still waiting on their funding and wondering, how can they keep their business operations going while still not being certain whether or not they're going to have this potential 8-week grace period of forgivable debt coming to them. So it's scary time, but we are hopeful that with this refunding of the PPP program, along with the other programs, that we're hopeful that small business can continue to survive and hopefully thrive during this period of uncertainty.
Yeah, and I guess can you maybe just tell us a little bit about the payroll protection plan program?
Sure. As you mentioned previously, it is supposed to be a forgivable loan that can cover 8 weeks worth of majority payroll costs. Basically, the program says that once a loan is funded, and I can talk a little bit about how a loan is funded, but once it is funded, that 75, in order to maintain the forgivability, 75% of that loan needs to go towards the payroll portion of the loan, while the other 25% can be for rent and utilities and things of that magnitude. The way it's calculated, the way, and this has changed a few times, but the typical way this is supposed to be funded is it's taking the last 12 months of the business's payroll costs or operation costs, and taking a monthly average of the last 12 months, and you get sort of a loan of 2.5 times that amount. So typically what this means is you're looking at the wages of your employees, with the caveat I'll get to in a moment, along with the any insurance benefits you pay for them, any retirement benefits you pay for them. Those are the main components of what goes into this calculation for average payroll costs. You take divided by 12 and times 2.5, that's your loan amount. One of the large caveats is that if you're paying any employee over $100,000 over the last 12 months, that only the first 100,000 counts towards payroll costs. That doesn't mean, though, that you have to back out what you've paid them for health insurance or retirement contributions. Those also count towards your payroll costs. So you're still getting a benefit. That $100,000 cap is only towards the actual physical wages or salaries paid.
Got it. So so someone only got paid 100,000. I'm sorry, if they got paid 150,000 in wages, and then they got 20,000, for example, in retirement contributions, then their 150 would be capped at 100K, but they would still get their additional retirement.
Yes, correct. The business would still be able to take the 100,000 wages plus the 20,000 paid towards retirement. So for that employee, they're essentially getting the benefit of 120,000 during the year period, and again, they would divide that by 12, sort of, for that employee's personal cost. But it's just a cap only applies to actual wages paid, not to the other type of benefits outside of wages.
Okay, so if you're a small business and you had a number of employees last year, you would use this calculation based on the number of employees you had then, not necessarily what you had today, but your forgiveness will be impacted based on what you pay today. Is that accurate, Michael?
The forgiveness, right, correct. So before we were talking about how to calculate the loan amount, the forgiveness amounts are going to be based both on the number of employees that you have today versus testing periods, either one last year or one early on in 2020. Also looking to make sure that the employees that you do have didn't have their salaries reduced substantially. And generally what we're talking about there is, as long as the employees didn't have their salaries reduced above 25% of what their comparable salaries would have been in the previous quarter, then that will minimize the forgiveness quotient. That 25% reduction is only talking about salaries that were at $100,000 or lower. For employees that were earning above $100,000 last year, you could reduce them I guess hypothetically down to 75,000 without being penalized for that reduction. So again, that cap, with the way they're calculating that, though, isn't saying you pay them 75,000 or 100,000 over that 8-week period. It's looking at the wages that are paid during the 8-week period and annualizing it over the course of the year to see if there's been a reduction or not.
Got it. Interesting. So it sounds like there's a lot of rules, but there's also some flexibility built in. And although it seems like the calculation is pretty straightforward in terms of, you just figure out your monthly average of payroll, there's still a lot of details involved in calculating your average monthly payroll.
Yeah, I would second that, and also note that the rules are evolving. I don't know if they've gotten a lot more rigid over the last month, but I mean, certainly within the month of April, the rules have either changed or analysis of those rules have changed several times, and I'm sure different banks are analyzing them in different capacities. So I think we're getting a little bit more clarity as we head out of April and into May, but it's been a wild ride this month.
Yeah, so I guess if you're a business that hasn't yet been approved, say that you just started the application process with a bank a couple weeks ago and you haven't been approved yet, are there any thoughts or suggestions that you'd have for them?
Just make sure that you're actually looking at what you put on the loan application a few weeks ago to make sure that that still still is what the IRS would be looking for, the Treasury Department is looking for when they're reviewing these loans.
Yeah.
So make sure that your payroll costs that you said 3 weeks ago when guidance was one thing versus what it could be today is correct, and don't just rest on what was reported a few weeks ago. In addition, it's been another month, so you might want to look at have your last 12 months of payroll costs changed. So there's always things that could have changed between the time you first submitted and before you actually have a loan submitted by a bank.
Yeah, and one of the things that I heard from one of our clients that applied on Chase or applied to Chase was actually that they have been sending notifications to certain companies saying that your payroll numbers don't match what the government or the SBA has on file. And so, you know, if you're in the process of applying, definitely make sure that your numbers are accurate, because we've seen people that have kind of been holed up in the application process. So going to your Form 940s or 941s, which are your payroll tax forms, and sometimes relying on those. But Michael, you bring up a good point. You know, we have to look at 12 months. And so the 941s don't always tell, I guess, the full picture. Perhaps we have through March, right? We can use through March for the first quarter and then use the periods before then. Maybe that's one option. But yeah,
Sure.
so
yeah, absolutely. The 941s are a great source for payroll information, as long as you're keeping in mind that not all salaries will count towards payroll costs if you have employees compensated above $100,000. So otherwise, they're a really good source to start with, and probably something the bank may even ask for.
Yeah. So just some tips if you're thinking about applying for the PPP program. Again, the applications just opened up for the SBA today, but that doesn't mean that you have to wait at all to start applying through your bank. If you haven't already, you might want to start that application process right away. And just some tips for people that are out there: get your payroll tax forms together, 940s and 941s. Have financial statements for your business ready. So profit and loss statements for 2019 and also for the last 12 months can be helpful as well. And just having these documents ready, as well as other just business basics like having your EIN number, your full business legal name, all that stuff ready for the bank, so that when the applications do go live, if they haven't gone live already, on your bank's website, you have all that information ready to go. A question that I'm asked all the time is, if I've applied through one bank and I haven't gotten an answer yet, should I apply to another bank? And Michael, I don't know if you have any thoughts, but I think it's kind of a tough question. The guidance tells us that you could only get the loan one time, that you could only apply through the SBA one time. But I think there's ambiguity as to, well, if you apply to 2 banks and then one of them gets there first, and you know, is that okay? And then, and so, you know, if you're someone that's applied through one bank, do you think that there's any issues necessarily with applying to another?
I think you just need to communicate with the bank to ensure that you haven't gotten a loan number or anything to that point. You could advise them that you're going, you know, if another bank is further in the process, make sure you're keeping an open line of communication. You wouldn't want to have that loan number be generated twice for the business. So I suppose I would be careful about proceeding too far with both banks at once. But if you've got, you know, had an initial application with one bank and kind of cancel it early on, suggest that's probably okay.
Yeah, I would agree. And I guess another question that comes up a lot is for people that don't have payroll, just sole proprietors, people, independent contractors and sole proprietors. And it sounds like the guidance that came out of Treasury a couple of weeks ago clarified that, in fact, independent contractors and sole proprietors are eligible. It's just the calculation's a little bit different. instead of looking at your payroll numbers, you look at your net income on your Schedule C, and that can be limited, or that can be up to 100K. And so if your net is over 100, then you only use 100. If it's less than 100, then you use that amount. And then you do the same formula where you divide it by 12 and then multiply by 2.5. So hypothetically, if your income was over 100,000 on your Schedule C last year, then you'd use 100K, divide that by 12, which is 8,333, and then multiply that by 2.5, which is roughly $20,000. So if you're an independent contractor or sole proprietor, you're eligible, but you're going to be limited to the amount that you can claim, and then also for your forgiveness. And that total sums to about 20K. Is that your understanding as well, Michael?
Yeah, I would totally agree with that for self-employed, and it gets a little bit stickier. And I think they've released some technical guidance when you've got a sole proprietorship who actually has employees as well, because then there's also a payroll component plus your net business income. So I think that's where it can get a little stickier, and the loan amounts can be different. But the opposite of having it capped at $100,000 is if you showed a net loss during 2019, unless you're able to show that your last 12 months are different, and so you're not in a losing position, you're not going to be eligible for the payroll protection plan. And whether or not that's good policy or not isn't really debatable at this point. It's what is out there is basically if you had a loss in 2019 from your business, you're not going to be able to get a loan under the payroll protection program.
And then I would assume similarly, if your income was lower in 2019, say your net income was only 50K, but then you were doing great in the first couple of months of 2020, you're still going to be limited to that amount. Is that correct?
That's my understanding as well, is that it's starting, they want that line 31, I believe, of the Schedule C, that basically the net income of the business is sort of the threshold for that test. And so I would agree.
Yeah, but otherwise, this seems like it's a great option for people that may not really consider themselves as small businesses, really just sole proprietors. And when we talk about sole proprietors, we're referring to people that don't necessarily have an LLC. You might have an LLC, but you don't have to. You could be just running your business as yourself under your social security number. And so even if you don't really think of yourself as a small business, you in fact are from a tax perspective. So if you have a Schedule C, that's really what we're looking at, or what the SBA is looking at for eligibility for the payroll protection program. And then another question that comes up a lot too, Michael, is new businesses. What if you just started your business in 2020? Can you get it then?
Well, I think it really is going to depend on when that business was started. It's my understanding if you tried to start something in the middle of this pandemic, that's not necessarily going to qualify. I think the seasonal or starting businesses, if it was started prior to March, maybe through February 28th, if I recall, something to that magnitude, I believe there's an opportunity to get a loan under the PPP at that point. But I don't believe if you're starting one now that you'd be able to obtain a loan.
So it sounds like in sum, if you were in business last year and you were profitable, you had net income on line 31 of Schedule C, then you're probably eligible for some funds under this program. If you had a loss, you're not. If you're seasonal, if your business is seasonal and it just started a few months ago, then maybe. But if you're now just starting something now, then no, you're not going to have enough history. You're not going to be able to have any eligibility. If your circumstances somewhere in between, probably a good reason to contact a lawyer or contact us. So we talked a little bit about the PPP program, but maybe we'll talk a little bit about one of the other options, which is the EIDL, or the Emergency Disaster Loan. And so different than the PPP, the EIDL is a loan. So again, the PPP is a loan to begin, but as long as you follow the rules, then a portion or all of the loan can be forgiven. And so the PPP is, for a lot of businesses, in many ways like a grant, as long as you follow the requirements. But different than the PPP, the EIDL is actually a loan. So There's no forgivable portion except for a small grant, which we'll talk about. Otherwise, it's just a loan. It's at a relatively low interest rate. It's 3.75%, and it's a fixed rate of 3.75% for the term, which is generally 10 years, but I believe there could be ways to extend it past that. Again, it has to be paid back. So you pay it back over time, but it's not like the PPP where if you use it to pay payroll and rent and things like that, and we'll talk a little bit about the requirements, you have to use it for business expenses like that. You can't just use the money to put it in your pocket, that you still have to pay it back. So it's a pretty favorable rate loan, but at the end of the day, it's still a loan. And the maximum, what is it, 10 million, Michael? On the,
I think it's 2 mil. I think it's 2 million.
Sorry. 2 million. Yeah, 2 million. So you could be eligible for quite a lot of money, and your eligibility is not based on just your payroll last year or your Schedule C line 31. Guidance hasn't been issued, and we've been staying on top of this all the time and talking with our clients through this process. There is no clear guidance on how the amount will be calculated that you're eligible for, but what we do know is that you could be eligible for up to 2 million. The application is on the SBA website. So a big difference from the PPP is we talked a few times about the PPP and how you have to go through a bank, and different banks have had problems. Some banks have been more responsive than others, but the EIDL loan, you don't actually apply through a bank. It's just through the SBA website. And so that's something you can do yourself directly. You don't have to wait for a bank. Once the SBA opens up that process, you're free to do it. Is that your understanding, Michael?
Correct. And I think you had said that they have started reopening this. I wasn't sure if this program has yet been reopened. So that might be news of the day I missed. But yes, I would agree that this is directly through the SBA and it's online. And this is a great resource. If you've previously had trouble obtaining a loan or obtaining funding and the PPP isn't going to be right for you, maybe you don't have substantial payroll, and that's going to not really put you in a position to get a ton of money through the PPP, but you have other substantial operational costs and you're worried about cash flow. This might still be a good program. And Andrew had mentioned the possibility of a grant through the EIDL. And there was, when the program came out, there was supposed to be a $10,000 grant that was funded within 3 days of application. And it all sounded great. Turned out the money really, there weren't a lot of success stories with companies obtaining the grants, certainly within the 3-day time frame. And within a few weeks, the SBA was issuing guidance and clarifying that a $10,000 grant would be up to a $10,000 amount, but it would be capped at $1,000 per employee. So there are still limitations on the grant, but in terms of access to cash flow, getting loans of up to $2 million, and also not needing a personal guarantee if the loan is at or below $200,000. This program is a good tool to the extent it gets funded and open for businesses that don't have substantial payroll costs.
Yeah, and it sounds like it's a great option perhaps for businesses, like you said, that may not qualify for the PPP, but still want access to cash. Although it's not forgivable, there's still some great benefits to it. So I think we don't have that much time left. So maybe let's just quickly talk about the payroll tax credit, which is another option that's available for small businesses. So Michael, something that comes up all the time is, how do I actually apply for the payroll tax credit? Do you actually have to apply? What's that process like?
There's no application for the payroll tax credit. The payroll tax credit is going to be, I guess we should talk a little bit about what the payroll tax credit is, but in reality, there's no application for it, with the exception of if you're trying to get an advance for it if you don't use it up in the first quarter. So really what it is you choose, first of all, if you're doing this, you're not doing the PPP, so it's one or the other. But it's a $5,000 per employee credit on the first, up to $5,000 credit per employee on the first $10,000 of wages paid to an employee, which is basically taken as either an advance or credit against the payroll taxes that are normally due quarterly for businesses. in order to obtain the credit, there's not necessarily an application, but you have to be an eligible employer. So the business was, so you either have to meet tests of the business being operational in 2020 or had the business closed or reduced operations due to orders from the appropriate government agency. Or if you can show that the business is severely impacted, other gross receipts are under 50% of where they were the comparable quarter from 2019. If you can meet either of those tests, and due to the stay-at-home orders for the government, most of the state's governors, most companies probably will be able to meet these tests. But if you can meet those tests, then you can take this credit against the wages paid to your employees. So essentially, if you're paying an employee $10,000 in wages, you're kind of only paying them $5,000 because you're getting a $5,000 credit back. Importantly, not all employees will qualify for this. So if you own a small business and you treat yourself as an employee, maybe you're an S Corp and you have yourself and your family on payroll, you're not an eligible employee for this program. Your family members aren't an eligible employee for this program. So keep that in mind when you're doing this. But for the most part, if you don't want to go in the PPP route and you have substantial payroll, this is a good tool to get a significant credit against those wages that are paid out.
Got it. But here it's only limited to $5,000 per employee, whereas in the PPP you can get more, potentially the entire payroll paid for. But to your point, Michael, this is a lot simpler process. There's no actual application. It's just using the payroll tax forms, unless you want a advance payment. But also, this is actually, it's cash paid back to you, right? It's not just an offset of your payroll tax. What if your wages exceed your payroll tax, you actually get the money back, right, Michael?
Correct. It's a refundable credit, and that's potentially when you would. I mean, let's say you don't utilize the full credit in the first quarter. You pay someone wages of, I don't know, $20,000 a year, so you're not going to pay them $10,000 in the first quarter. You can actually fill out IRS forms. I think it's 7,200, and basically request in advance of those credit for a credit that you're going to be paying those wages in the subsequent quarters. So you want the credit now, even though you haven't fully paid it during this quarter. So you can have access to the cash quicker by doing this, but that's the only quote unquote application that would be for. Otherwise, it's just completing the payroll forms.
Got it, which is something that you'd have to, anyone that's running payroll is completing those forms anyways. And I don't think we've yet seen what the new form is going to look like that has this, but it's just going to be part of the normal forms that anyone that's running payroll would have to otherwise do.
Right. In terms of if you pay the wages during the quarter, that 941 second quarter, I don't know if there'll be a specific line item for it or how they're going to do it, but it will be on that payroll form.
Got it. And then I think the last thing that maybe we'll quickly talk about is payroll tax deferral, which is different than the credit, it's different than the loans, it's a different option altogether. And really this is an option, again, for employers that have payroll. So you have to have payroll to take advantage of this, but allows you to not pay your payroll tax until the end of 2021 for half of that payroll tax amount and the end of 2022 for the other half. So 50% due 2021, 50% 2022. Is that right, Michael?
Right. It's correct. It's for the employer's portion of Social Security taxes. So we're not talking about deferring the entire amount that would be due on the 941, because the 941, you're reporting your employer's withholding that you've withheld from their pay, and you're giving it to the IRS, and you're also reporting you're reporting the employee's share that you've withheld, and you're giving it to the IRS, and you're doing the same for the employer portion. It's sort of split between the employer and employee. Here for the deferral, we're talking about deferring the employer's portion of Social Security taxes, and you can defer on all the wages paid through from March 12th through December 31st of 2020, the whole employer Social Security portion. 50% of that amount will be due by December 31st, 2021, and the other 50% will be due by December 31st, 2022. So it's again, from a cash flow perspective, not forgivable, but you are deferring payments for close to 2 years on what could be a significant amount of money. We're talking about Social Security taxes.
And no interest on this either.
There you go. An interest-free loan from the IRS.
Right. So we've talked through a few different options, and we're going to go in just a minute. But to kind of recap the different options. We talked about the PPP, which is a forgivable loan. We talked about the EIDL, which is just a loan, but a pretty favorable loan. And then we talked about the payroll tax credit, which is up to $5,000 of a refundable credit per employee. And then the final option, which is payroll tax deferral, which it doesn't come out and say explicitly, hey, this is like a loan, but the practical aspect is that it's basically an interest-free loan for the employer portion of payroll taxes, 50% of that till the end of 2021, the other 50% till 2022. So there's a number of different options that are available for small businesses. We've spent 30, 40 minutes going through these in just brief detail, but in fact, there's a number of intricacies involved in each of these. And as Michael mentioned, you can't take all of them. Certain ones you can double up, but certain ones you can't. And so it's important to know not only what you're eligible for, but have a plan as to which to take. And so just in closing, myself, Michael, and our team were available to help you, to help small businesses out there look at these options and also take advantage of these options as well. So go to gordonlawltd.com/stimulus, gordonlawltd.com/stimulus. But thank you very much, Michael, for joining today. Any other comments that you have?
No, thanks for having me, Andrew. I just hope every business out there is analyzing and taking advantage of one of these programs. These are disturbing times, and the government has done for now what it can to help small business out. So make sure you're taking advantage of something during this time.
Thanks, Michael.
Thank you.